Hello everyone, in this video we will discuss runes. They have been around for some time, and when they were launched they made some noise. The main question is, what future awaits runes? Is there any hype left to boost rune tokens? There are many opportunities here on the crypto market, and in order to make good money, it's a good idea to track as many as you can. Back in the days of halving runes became a big topic in the community. Is there any juice left? Make sure to watch the video until the end, for I will analyze how well runes are doing now. Furthermore, I will share some thoughts on what to be aware of when accessing projects in crypto. Let me know in the comments, what do you think of runes? Is it a good thing for Bitcoin or not? Okay, let's begin. For those of you who don't know, runes is a protocol for creating fungible tokens or runes on the Bitcoin blockchain. They allow for the creation and spending of specific asset within the network. For example, you can create your own meme coin that can be minted, distributed through airdrops, and exchanged among users. Similar to BRC20, tokens runes are fully dependent on the Bitcoin blockchain. However, they are designed to integrate more organically into the Bitcoin ecosystem and to reduce blockchain congestion. Runes is the brainchild of Casey Rothermore, who has previously introduced ordinals into Bitcoin. His creations have generally become somewhat controversial, with part of the community endorsing his attempts to tinker with Bitcoin, while others criticizing him for polluting the blockchain. As for me, I would like to stay impartial. However, I believe that both sides of the debate have their points. So what is the buzz around runes? The protocol itself came into life with the latest Bitcoin halving on April 20. Immediately after that, transaction fees on the Bitcoin network skyrocketed. The average transaction fee reached a record $128.45 on April 20. Like if you want to have your fees low. If you're okay with high fees like any way out of your profound generosity. It's clear that such an important event as the halving couldn't help but stimulate excitement around digital gold. However, it was mostly runes to blame. On April 20, the day runes was launched, the number of transactions on Bitcoin that were related to the project reached 463,624. Compare this to only 163k of other Bitcoin transactions. In other words, over 70% of transactions on the blockchain were attributed to runes. Runes transactions continued to dominate the Bitcoin blockchain for several more days. The record of 81.3% of all transactions were set by runes on April 23, until April 25, when their numbers roughly equalized. After that, good old Bitcoin regained its leadership, but the presence of runes in the network still remained quite noticeable. Now, for more than a month, it stays below 10%. But what are those runic transactions? To analyze them, we must first understand how runes work. Like in NFT, runes have minting, but other than that, etching and edicts. Etching is the process of creating and setting up a new rune token. During etching, all necessary properties are set, like name, symbol, amount, cap, and so on. Then the minting comes. The mint transaction creates a fixed amount of units for a rune. Anyone can mint a rune until the total cap, which is defined during etching, is reached. And when someone wants to transfer runes, one must make an edict, a message defining how a rune should be transferred from an input to an output. All of this is possible because in the Bitcoin transaction there is an OP return function that allows to add a little bit of info to the transaction, which will not affect the transfer of Bitcoin itself. It is actually a controversial part of the Bitcoin protocol, for some believe that use of OP return is quite irresponsible. Their reason being that Bitcoin was intended to provide a record for financial transactions and not arbitrary data. However, such an opportunity exists, and runes do take advantage of that. So what on-chain data concerning runes do we have? There have been almost 89,000 etchings, 8,125,000 edicts, and 9 million mints. It means that, as for now, the most amount of transactions was minting and not transferring. The balance is changing over time, with more activity shifting towards distribution of runes rather than creating new ones. However, for now, the picture doesn't look that great. So to put it in simple terms, the data might suggest that there is a lot of supply and not that much of demand. Many have minted runes for themselves, however, for some reason they hold on to these runes. Maybe they're waiting for the right moment to sell and capitalize on minted runes. Or it could be that there are not many people willing to buy. In any case, this can decisively change only when runes have a bigger interest for the market. Will it happen though? Not so sure. Let's see how well runes are doing. The flagship for runes is Dog Go to the Moon Dog token. It is worth more than $310 million, which is far more than the capitalization of most of the other runes. Well, now it trades close to its all-time low. All of the $100 billion supply is already in circulation, so there will be no new dogs. Is there a potential for big growth? Yes, but only if runes overall manage to gather the market's attention. Otherwise, it shall be far too exotic of an asset. Will runes go to the moon? I doubt that. My main reason is that Bitcoin is not made to accommodate tons of meme coins. It is slow, conservative, and overall in a whole different weight category. Okay, let's pretend that runes become overhyped and everyone wants to get them. Well, will the Bitcoin blockchain be able to handle such an activity? $128 fees on the day of runes launch suggest not. And that brings me to my final point. Blockchain is a technology and it should be used for the most effective outcome. So if you want some meme coins to fool around with, we should have them on blockchains that can easily accommodate such coins. Yes, one can try to put things on stilts in Bitcoin, but will the market favor that decision in the long run? Write in the comments what do you think. As for me, when I analyze a certain project, I am always looking at whether blockchain has enough capacity to run things smoothly. So guys, that was Michael with you today. Stay tuned to this channel and don't forget to like, push the notification button and subscribe. See you next time. Bye.